Hey everyone, welcome back to Corporate Decoder, the place where we unpack complex financial documents and reveal the real story behind the numbers. Today we're diving into a TC Energy Corporation Form 40F report for the year ended the 31st of December 2025. This filing essentially gives us a yearly health check on the company. Before we dive in, be sure to subscribe if you like getting straight answers from corporate filings and join our Discord community, linked in the description below for more insights and discussions. So what's the big picture here? TC Energy is a major player in energy infrastructure, and this report is their annual update to investors showing their financial standing operations and future outlook. We'll be looking at the key financial numbers, their strategic direction, and the risks they are facing. Let's kick things off with a look at their outstanding shares as of the 31st of December 2025. TC Energy Corporation had a massive 1,040,835,168 common shares outstanding. That's a lot of ownership slices in the company. On top of that, they had various series of preferred shares. For TransCanada Pipelines Limited, a wholly owned subsidiary, they had 992,720,977 common shares outstanding, all owned by TC Energy. This structure shows TC Energy is the parent company clearly controlling its subsidiary. This report incorporates TC Energy's annual information form, audited financial statements, and management's discussion and analysis. They're telling us that the financial statements are complete and everything has been reviewed and approved by their management and likely the board. Management's report on internal control over financial reporting also indicates that they feel confident in their systems for producing accurate financial reports. Looking at their stock information, the common shares of TC Energy Corporation are traded on the New York Stock Exchange under the ticker symbol TRP. This is important because it shows their significant presence in the US market and their commitment to transparency for us investors. Now let's get into the meat of it, the financial performance. The report directs us to pages 129 through 215 for the audited consolidated financial statements. This is where all the detailed numbers live. Following that, on pages 9 through 128, we have management's discussion and analysis, or MDA. This is where management explains the financial results, their strategies, and what they see ahead. It's like the company's side of the story for their financial performance. TC Energy is upfront about including forward-looking statements in this document. These are statements about the future, like their anticipated performance, growth strategies, and expectations for projects and capital expenditures. They use words like anticipate, expect, and believe to signal these are projections, not guaranteed outcomes. They explain that actual results could be very different due to various risks and uncertainties. They're essentially saying here is our best guess for the future, but things can change. They mention a whole list of factors that could influence future performance. This can include things like how well acquisitions and sales go, the outcomes of regulatory decisions, how their pipelines and power assets perform, expected construction costs and schedules, and even global economic and political conditions. They also highlight sustainability-related risks and climate change impacts as critical areas for their future outlook. It is a pretty comprehensive list of potential challenges and opportunities. Digging into the assumptions and risks, they're making it clear that things like mergers and acquisitions and how well they integrate those deals are key to their success. Other critical assumptions include regulatory approvals, the reliable operation of their assets, and access to capital markets. The risks are pretty extensive too, encompassing everything from market price fluctuations and competition to cybersecurity threats and the impacts of energy transition. Looking at the actual financial data, the report references TC Energy's 2025 audited consolidated financial statements. While we don't have the exact numbers visible in this particular document preview, what we can see from the structure is that they are providing detailed financial statements and management commentary. It is also standard practice for companies to disclose their auditor. TC Energy's independent registered public accounting firm is KPMG LLP, based in Calgary, Alberta. This confirms their financial statements have been audited by a major accounting firm. TC Energy states they have no off-balance sheet arrangements beyond guarantees and commitments already detailed in their financial statement notes. This means they are not hiding significant liabilities or obligations in ways that are not visible on their main financial reports. The company also identifies its audit committee members. This committee is responsible for overseeing financial reporting and internal controls. They state that they have at least one audit committee financial expert serving on the committee, which is a regulatory requirement to ensure expertise in financial matters. Mizuna Power is specifically named as an audit committee financial expert. A code of business ethics is also mentioned. This outlines the expected conduct for directors, officers, and employees. They confirm it was reviewed and amended in 2025 with only minor non-material changes. This shows their commitment to ethical business practices. There is also a policy mention regarding the recovery of incentive-based compensation if it was awarded erroneously. This is a compliance measure likely related to regulations that require clawbacks of executive pay under certain circumstances, like financial restatements. The Code of Business Ethics is available on TC Energy's website, and any interested party can get a copy. This demonstrates transparency in their governance practices. Now, let's shift to the broader financial story and what this filing might be telling us. TC Energy operates in a critical sector, essential energy transportation and storage. Their financial health directly impacts energy security and economic stability. This report, while summarized here, is a snapshot of their performance and position. Looking at the overall numbers, which are detailed in the full financial statements and MDA, you'd want to see consistent revenue growth and profitability. For a company like TC Energy, a key metric would be their earnings before interest, taxes, depreciation, and amortization, or EBITDA. This shows their operational profitability before accounting for financing decisions and asset wear and tear. We'd also look at their debt levels. Energy infrastructure projects are capital intensive and often funded by significant debt. The question is whether their cash flow is sufficient to manage this debt and allow for growth. We also need to consider their segment performance. TC Energy breaks down its operations into segments like Canadian natural gas pipelines, US natural gas pipelines, Mexico natural gas pipelines, and power and energy solutions. Understanding the performance of each segment tells us where the growth is coming from and what might be lagging. For instance, if their US natural gas pipeline segment is showing strong growth, it suggests successful expansion or higher utilization in that market. Conversely, if power and energy solutions is underperforming, it might indicate challenges in commodity markets or asset performance. The forward-looking statements are crucial too. TC Energy is telegraphing its strategic priorities. This could involve building new infrastructure, expanding existing assets, or even divesting certain operations. Investors would be watching to see if their proposed growth strategies are realistic and achievable given the current market conditions and regulatory environment. Risks are always present. For TC Energy, these include regulatory changes, commodity price volatility, and the ongoing energy transition. Climate change and the push for cleaner energy sources can significantly impact demand for fossil fuel infrastructure, creating both challenges and opportunities for adaptation and investment in new technologies. The company's ability to navigate these transitions will be critical for its long-term success. In conclusion, this Form 40F provides a comprehensive overview of TC Energy Corporation's financial health and strategic direction for the year ended the 31st of December 2025. While the full details are within the reference documents, the overall picture points to a company actively managing its substantial energy infrastructure assets with a keen eye on future growth, diversification, and the evolving energy landscape. Investors will want to pay close attention to their debt management strategy, their capital allocation decisions, and their progress in addressing sustainability and climate-related risks. The company appears to be navigating a complex and dynamic industry with a clear strategy while acknowledging the inherent risks. Alright, that is our look at TC Energy Corporation's latest filing. What do you think about their strategy and the risks they're facing? Let us know your thoughts in the comments below. If you found this deep dive helpful, smash that like button and subscribe for more breakdowns of crucial financial documents. And don't forget to join our Discord community linked in the description for more insights and discussions. Thanks for watching, and we'll see you in the next video.